Hey guys, welcome to Home is Where the Heart Is, a home buying seminar specifically designed for first-time home buyers and any previous homeowners who want a reintroduction to the process in today's market. In part one, we'll work to dispel a few of the common myths of the home buying process, as well as discuss several mortgage options. So hopefully everyone had a chance to sign in at the front, name, mailing address, phone, contact, email, all that kind of information, so we can send you some goodies, send you some tips and tricks from our professional vendors. And don't forget to complete your comments card because we will have a giveaway at the end. Just a little bit about me. I guess you guys know already, but my name is Hattie Best. I'm a native of Stamford, Connecticut, but I've been in Georgia since the 90s. I've lived all over Georgia. Currently living in Gwinnett County, Peachtree Corners, moved here during the pandemic. But I used to live and work in the late 90s, early 2000s over when Macy's Technology was down in Governor's Lakes. I don't know if you guys know that area, but anyway, I know Gwinnett County very well. Also know the metro area pretty well also. I'm passionate about first-time home buyers. I became a first-time home buyer in my 20s, and I've loved every minute of it. Haven't looked back yet. By the way, do you guys know what a first-time home buyer is? Okay, that's a good guess. It's actually someone who has never bought a home before or who hasn't bought a home in the past 3 years. And so there are a lot of programs that are designed for first-time home buyers, and lots of people are surprised to learn that they too may fall into that category. So it's not everywhere, but yeah. So I always like to throw that out there. So just a couple of facts about myself. You can read them. I won't bore you with the details. I'm just happy to be here and happy that you are spending some time with me on Saturday. I am part of the Family Homes Georgia team. You guys may have met Amy Fuchs at the front. She's our leader, and this is just our great panel of agents, admins, listing coordinators, transaction coordinators. So between us, we will get your deal handled very easily from end to end. Okay, little housekeeping before we begin. In the event of an emergency, we have 4 exits here. Just follow myself, Matt, one of us will guide you to the point of safety. Of course, you've already seen the refreshments. Please help yourself. Bathrooms out this door. Take a left, go to the end and take another left. Where's it right?
Yeah, right out these doors and then take a right.
Out these doors and take a right.
Yeah.
Yep. And then does anyone need special assistance? Anyone special assistance? Okay. And then there will be a 10-minute break about midpoint in the program today. All right, before we begin, what's the most important thing you would like to learn today? Anyone? Everything. Okay, that's a good answer. Good answer. Well, hopefully by the end of our program, you will have all of your questions answered, but hopefully we'll also be able to dispel some of the myths about home ownership. I just listed a few here that I've heard in the market. People think they can't afford to buy a home right now. They wonder if they should wait until the market tanks like it did back in 2008, which we don't think will happen. They believe that a large payment is required. So those are some of the most common myths, but what are some of the things that you guys have heard or that you believe to be true?
Statements that high interest rates right now are looking to go down, but not real fast.
Okay. These are kind of the top 3 that you've heard. Same things too. Okay.
Really afford to buy a home right now. You know, like we don't know how much home we can get if we can't afford one, and what we
Okay.
our range.
Okay.
At 0.0.
What's that? So Matt here, so that's a perfect segue.
Awesome.
Matt Kuglin is with us. He's with Shelter Mortgage, and he can answer a lot of those questions for you. So I'm going to invite you, Matt. up.
Awesome. Do you want to
I
control
will.
this?
I'll do the
Okay,
slides.
awesome.
Yeah.
I'll
Just say
point to you.
beep when it's time for me to advance.
Beat. All right. Yeah, I'll point at you. I introduced myself already, but Matt Kuglin with Shelter Home Mortgage. Before I get started, just it's very, very important. I've been in this business for almost 13 years now. Finding a realtor and a team that's going to work hard for you, you are in the right place. I've worked with Amy, Hattie for 2 years now. There's a different level of service when you're getting into the home buying search and finding a team that's going to not only be diligent and detail oriented, but also knows how to negotiate and works hard. That you've found the right team here. So good job. Kudos for you guys being here. As I said, I've been in the mortgage industry for over 10 years, pushing 13. I have helped now close to 1,000 families realize their home ownership goals. Last year, our team was able to help 208 families close in their house. So we've got a very efficient team, and over half of those were first-time home buyers. Same situation you guys are sitting in right now. I'm the in-house lender at Keller Williams Chattahoochee North. So this office that you're in, my office is actually right outside of this meeting place, which is important to you when you guys are working with Hattie, especially in the pre-approval process and throughout the mortgage process. There's nowhere for me to really run and hide when you guys have questions. So very important there. Personal life, born and raised. I'm a Georgia boy here in Georgia. I grew up in Snellville, now live in Alpharetta with my wife. My 2.5-year-old Reagan wrapped around her finger. And of course, couple hobbies, just traveling and golf, to let you get to know me a little bit better there. But today, I want you guys to ask questions. If there's something that pops up that you've thought about or you've heard a myth or whatever, I want this to be interactive. So please feel free to ask questions. But the biggest thing is when I'm speaking with a first-time home buyer, majority of the time they're thinking this is going to be a daunting process. I don't know if I'm ready. I don't know if I have the time, to get documents together or get prepared. So hopefully by the end of this, you'll know some pros and cons and how to get prepped, but then you'll also realize it's really not that difficult of a process. So ping. So first, to your point about interest rates, what I want to look at here is, sounds like you've been listening to the news where rates have popped up since the pandemic, correct? And that's a big concern with a lot of first-time home buyers is, can I afford? Should I buy right now while the rates are a little bit higher? I think it's important historically to know, since they started pulling in data for mortgage rates, so that was in 1971, the average interest rate for a 30-year fix has been 7.75%. So right now, depending upon the product, rates range kind of mid-5s to lower 6s. So we're still below that threshold. It's important to know that. So this is an illustration based off of a $300,000 loan amount and the difference of interest rates and how that affects the principal and interest portion of the payment. It's going to lead me into the next illustration, but basically around that price point, every point difference in interest rate changes the payment about $185 a month. Right now, if we're looking at a 5% interest rate as an example, one of the biggest pros of purchasing a house versus renting is, you can go to the next slide, is that payment is going to be fixed for the life of the loan and as long as you're living in that house and keep that mortgage. Okay, so if we're utilizing $1,600 as that base payment, historically, rent increases about $100, give or take, annually. So looking at that threshold of your payment staying the same here versus what happens to people who end up renting for 25, 30 years, you're sitting at a $4,500 a month mortgage payment at that point. Yeah.
I buy a house today and
The principal and interest portion, yes. The only variables of it is going to be property taxes and homeowners insurance. A couple variables. If you have PMI, of course, that can drop off if you're putting down less than 20%. But the meat and potatoes of that payment, which is your principal and interest, if it's a 30-year fix, it's never going to move on you.
Just to double check, you said
yes.
The average increase in rate by 1 percentage point
$885. Yeah, and that's utilizing a $300,000 loan amount. So the higher you go, there's going to be a little bit of a change there. And I think Hattie's going to go into this a little bit later, but there's a thought process based off of what rates may potentially do here in the next year and a half, and how to take advantage of less buyers in the market right now, which is marry the house, date the rate type situation. And then we've also got, Shelter has some programs where if rates were to decrease dramatically, if you refinance before the end of 2024, we waive all lender costs, and there's also some additional fees that are reduced. So rates end up a little bit higher when you buy, and they improve. We're going to try to get you the best deal possible when you refinance. All right, so the daunting mortgages are scary, buying a house is scary. There's really three main categories that I'm going to look at and an underwriter is going to look at when you're going to purchase a house in terms of approval. You've got credit, which most products are going to allow for you to go down to 580 as your mid-score for credit. Of course, the higher, the better interest rate, the better loan product that's available, but we do have options down to 580. Income is a big piece. So a lot of people, a big common myth is I have to have worked at the same company for 2 years, or I have to have even been employed for 2 years to be able to apply for a mortgage and be approved. Not the case. And I'll go into some differing situations here in a little bit about when that holds true and when it doesn't. But then also we're going to look at assets or where your funds are coming from for the down payment and the closing costs, whether that's stuff that you have saved or potentially a gift. So some key credit do's and don'ts. Please monitor your credit. It is free. It is simple. It takes 5 minutes to go on. I utilize personally Credit Karma and Experian. I use two different ones. I'm logged in. They send me updates. The biggest thing for me is to make sure that my identity hasn't been stolen. Also, creditors make mistakes. So, I'm on auto draft. I know I've made this payment on my auto loan or credit card. You're getting pinged immediately, and and you can resolve that quicker. If it goes 2 years before somebody pulls your credit and you realize there's a missed payment on there, you haven't monitored your credit, so you haven't been able to avoid that. So another do with credit card balances, keep your utilization at 30% or under. And I'm going to go over some tiers in the next slide. But so if you've got an American Express and it's got a high credit limit of $10,000, you want to keep your balances at $3,000 or lower for that to be really building up your credit and helping your scores. Anything over that, you're going to start getting dinged. Very obvious, don't go over 30 days late on a payment. Credit bureaus are going to be notified after that month is missed. If you're a little bit late, 10 days, 15 days, fine. Do whatever you can to make sure you're making those payments before it hits a 30-day timeline. Another thing that I see is when people are thinking about purchasing a house, you kind of start getting used to the application process. And that's when I see people go to apply for a car, and they're also going to Nordstrom and getting a credit card. When you're opening up numerous types of credit simultaneously in a short period of time, credit bureaus look at that as a risk, and your scores will start dropping. So don't do that. Try to keep it maximum one per 6 month time period. This is a myth that I don't know how this information got out, but being set as an authorized user on someone else's credit card, people think this is very beneficial. It's not. There are certain cases where if you don't have enough credit, being an authorized user on someone who's making the payment, it can help. But the majority of the time, it's hurting your credit by being an authorized user. And then don't co-sign on auto loans or installment debt for others. The biggest, 2 points on this. One, if they're needing you, if mom, dad, sister, cousin is needing you to co-sign, they probably can't afford that. And that's where I see a lot of missed payments, and that's going to hit your credit. But the other piece is that car note or credit card that you're co-signing for, that minimum payment goes into your debt to income ratio. So it will pull back how much you guys are able to, to afford. So next. All right, so credit card utilization, this is just some tiers here to keep in mind. Again, optimal is 30% or less. of your credit card max. So again, that example, 10,000 high credit, keep it at $3,000 or less. Then once you move to 31 to 50, you're in that second tier. Your scores are going to drop. Then if you move to 51 to 70, you're getting pinged again. And then where you're really going to get dinged is anything over that 70%. So if you've got 7,000 or more on a $10,000 high credit limit, it's going to affect the scores pretty drastically. Yes.
I've heard that closing credit cards.
I'm going to grab my coffee here. Yes.
Closing credit cards hurts.
Yes. So if you, let's say you've got several credit cards and you get them paid off and you're like, listen, I finally got out of debt. When the consumer closes out the account with the creditor, it dings you. The smartest thing to do is if you finally got that Macy's card paid off, leave it paid at zero, cut up the card, and then wait 12 months, 2 years for them to cancel it, and it's not going to affect you. So great question. Another little bit of a hack, if you have the self-control, so let's say that you first applied and you've got $1,000 credit limit or $10,000 credit limit, but you're running about 4,000 to 5,000, you're trying to figure out a way to get it under, you can contact the creditor to increase your high credit limit, and then that utilization drops down. The only disclaimer on that is be careful. Yes, exactly. If if you don't have a lot of self-control and you start spending it and then you're racked up to $10,000 in credit card debt, that's when it can get scary. But okay, so income. There are really four main categories of types of income when we're pre-approving or underwriting a loan. You've got your standard W-2, so you're an employee, hourly, salaried, commission, bonus, that type situation. Taxes are being taken out before you guys are, getting paid. And then you've really got, it's two different separate types of self-employment. So there's one, you're a business owner and you've got over 10% ownership of that business, or you are a contractor. So you're 1099. So a lot of realtors, they're on the 1099 side. They wait to pay their taxes at the end of the year when they file. And then, of course, you've got retirement or fixed income, so Social Security and pension. What we're looking at, so if you're planning on buying a house and you're figuring out Swanee or Sandy Springs or whatever it is, but you're about to change jobs, I can utilize with an employee an offer letter that they have, as long as your pay is going to be structured at a point to where they can calculate it. So by that I mean, if it's hourly and you're being paid $25 an hour, if it's guaranteed 40 hours a week, we calculate it, we can utilize it. We don't need any history. Or if it's salaried. Where people get dinged is they flip over to self-employed and they're going to need a 2-year history of seeing those taxes filed. So just keep it in mind if you guys are trying to potentially change jobs, that's not something that will necessarily mess you up, but get with your lender. All right, so ineligible sources for assets and down payment. I don't know why I'm running across this so much recently, but a lot of people are wanting to keep their funds outside of the bank. They'll keep X amount in there, but they feel a little bit more secure having some in the safe, under the mattress, whatever. When you're buying a house, cash is not king. If you have large deposits that are going into your account that are not from payroll, they're going to have to be sourced. And a lot of times we have to pull that out of your qualifying assets when you're buying a house. So, keep that in mind. And then, of course, where can you pull? You're good, Hattie. Oh, yes. That's exactly what I was going to say on the next slide. But so if you do have anything over $2,000 in terms of cash, you've got it. We're not going to purchase for 6 months. We're going to look at different loan programs. Sometimes we're just looking at 1 month bank statement, other times 2. Go on ahead and get that deposited into your account, and then we don't see it, and it's not a problem. So we're just making sure that if it's been deposited in the last 1 to 2 months, that's what it can cause an issue. Great question, Amy. Eligible sources of assets for down payment. So checking and savings, that works. Obviously, where your payroll is going into, retirement account. So and we've got accountants over here, but with a 401k, there can be certain scenarios where you're not getting hit with as much of a tax liability when you're buying your first house and utilizing a 401k account. So something to look into. And then also investment accounts or gifts from family members, that works. Those are eligible. Loan programs and down payment requirement. So one of the biggest common myths is FHA. If I'm trying to put down the least amount of money, FHA is going to be the best option. Conventional loan, which is really the most sought after financing from an interest rate and a payment standpoint, has a 3% down option. You're going to get really the best pricing if you move to a 5% down situation in terms of the PMI and the interest rate. But a lot of people think, hey, if I'm putting down less than 20, I've got to go FHA. That's not the case. Do we have any? Has anyone served in the military? No? Okay. All right. VA does have a 0% down option. As we talked about, gift from a family member, that works for any of those loan products. And Georgia Dream, that's an option for down payment assistance. There's a lot of different hoops you have to jump through when you are getting a DPA or down payment assistance. They want to see a certain debt to income ratio. They don't want your income to exceed a certain limit. But there are times where down payment assistance can really help you, and it's a good option.
Back to retirement or 401k or down payment and the ability to access that. Are there any negative things that you think by trying to access that at this point?
So I'm not a CPA, I'm not an accountant, but when you are purchasing a house as a first-time home buyer, and sometimes depending upon how the 401k is set up, you're going to get, anytime you're pulling from a 401k, you're going to get hit with that tax liability. There are some breaks for people who are purchasing a house to where you're not hit as badly for those taxes because you're utilizing it for a home purchase.
I have a question about that. So
Sure.
they probably have tax. Okay. Have to withdraw. Or you can do it.
Yep.
Look at that as a lender differently.
So we used to have to include, if there was a loan payment, even though you're paying yourself back, let's say it's $500 a month is what you're going to have to pay back in the 401k. We used to hit you for that as if it was a car note or a credit card minimum payment. Now they do not include that in the debt to income.
So if I have a form I'm paying my car $10,000, is that for down payment?
Yes, we do.
What about, well, I have like changed jobs and I am bad. Not yet hold that. Out into my 401k.
Sure.
So it's just like kind of floating out there. Would I be able to take money from that for a down payment?
It depends on who is holding that IRA. I've seen people struggle to be able to withdraw it if it's, with a previous company's, principal versus Workday or whatever it is, whatever umbrella it's under. I think that'd be case by case. Yes. It's not a problem from a lending side. It's more of just you getting access to those funds.
I don't know that they better off. Well, I need it. I'm not doing anything right now. I'm like only doing myself this service. I mean, it's like a lot of
Okay.
stuff.
Yeah, you're earning money now. Right? Yeah.
What if with that HELOC? Always adding in.
Yes. Yep. So what we're going to do from an underwriting perspective is we review the credit report and we take the minimum payments of anything that's showing up. There's some other outliers, child support, stuff like that, if it's showing up on your pay stubs, but we're looking at minimum payments on your credit report. And if there is one for a HELOC, we take it into account.
Is a HELOC deemed better than like credit card debt?
Is what?
Is a HELOC a better type of debt or more favorable type of debt?
Not necessarily. I mean, underwriting doesn't look at a certain debt as, hey, this is a good one, this is a bad one. We really just want you to make it on time so that the scores are higher. And then we're looking at that minimum payment. The ones that I would say are bad is the high. You've got an auto loan where it's a $1,500 monthly payment. That's going to eat into what you qualify for. All right. So have y'all gotten pre-approved or pre-qualified or?
No,
Okay.
Do it at the beginning of this next month.
Okay.
Give ourselves a little bit of time to
Okay.
Trying to pay down some more debt.
Okay.
I don't know if we're-
And to that, and I didn't mention this, but we have, so if you're not monitoring your credit, let's say we have to move quickly, we have a credit enhancement team. So and we do this for anyone who's under 740, between, for you guys, for your couple, she's at 720, you're at 740, immediately we send your report to our credit enhancement team. They fully analyze and say, hey, if you pay down this credit card $2,000, her score will jump up to 760. It's a free service that we provide to you, but we want your scores as high as possible so that we're giving you the best rate. So don't worry too much about your credit being perfect. Okay, so pre-qualification versus pre-approval, and when should you get set up? As soon as you know that you're planning on buying a house, I always suggest get to a lender, let them review the situation, even if it's 12 months, 16 months down the road. The earlier that I can review the entire situation, the best that I can advise. You don't want to wait until you're going out seeing houses, especially in this market where everyone's moving quickly. You've got to have all that stuff taken care of, and a good realtor is not going to go show you properties unless they know how much you can afford realistically. So do that as early as you can. So pre-qual versus pre-approval. Back in the day, 5-6 years ago, and Amy may be able to touch on this, but pre-quals were fine. So what a pre-qual is basically you as the buyer have filled out an application and said, I make $10,000 a month. I have $50,000 in my savings account for down payment. And the loan officer reviews that entire situation with your credit. We then say, okay, based off of what they've said, they qualify at X amount. That's different than a pre-approval where we have got the application, but we've also verified all that information with your pay stubs, your bank statements, all that kind of stuff. And that's really, in this market, pretty non-negotiable that you have a pre-approval versus a pre-qual. Last thing I'll say. Yes, and there's a step further to this, and it's not on this slide, but what I have done last year, I'd say 70% of the clients that we closed, we put through fast track. So there's pre-qual, there's pre-approval, and then there's someone who's been pre-underwritten. And that means not just me, not the loan officer hasn't just looked at the documentation, but the underwriter has reviewed your entire scope at a certain price point. And what Amy's saying is if you get to that point where you're pre-underwritten, we've closed deals in 13, 14 days, and that gives you leverage when you're up against Sally and Tim and everyone else who's trying to get the same home. Which is important. Last one before we go to the next one is your import. I think there was one at the bottom. Does it matter which lender you use? Yes, it does. I've been doing this for 13 years, and I've worked for good mortgage companies, bad ones. One, having a local lender is extremely, extremely important. We have MSAs with different brokerages. Obviously, I'm here in this Keller Williams, but Shelter is very well known in Metro Atlanta. When they see a pre-approval letter from me, hopefully they know who I am. At least they know who Shelter is, and they say, we know this is going to close on time. So it's very important there. There's also, when you have a local lender, we have relationships with a panel of appraisers. So we know if somebody's doing a terrible job and they're lowballing value or they're acting like value's way too high, we're blackballing them off of the list. So we have the best appraisal panel, which is extremely important, especially in a time where values are still increasing and the market's shifting at different times. That's very important. So.
Exactly.
All right. Well, I'm here and available for you. I'll get the contact information from Hattie. If you have high-level questions or stuff that I didn't cover, I'm here to help. I'm glad y'all came out here today. This is the first step.
What if someone is ready to apply today?
So what I'll do is I'm going to get the email addresses. I'll send you my contact information and the link directly to my website. Right below my photo is an apply now button. It'll walk you through every stage. I normally like to have just kind of a phone consultation before you apply, just to get a feel. But if you're somebody who just wants to go knock it out, I'll send that to you via email and you can get that done.
All right. Thank you, Matt.
Awesome.